When introducing dividend growth investing, many wonder if living off dividends is feasible for financial freedom. It's possible to cover $50,000 year expenses with a $1 million investment at a 5% average dividend yield. For higher expenses, you'll need a larger portfolio. To learn the fastest way to achieve financial freedom through dividends, keep watching our video. A dividend is a company's reward to shareholders for their investment. It represents a stable source of passive income, paid in cash or additional shares. Investing in dividend stocks lets you share in profits while owning your investment. Most dividend-paying companies are established and tend to increase in value over time. To live off dividends, set a financial goal, create a plan, and factor in inflation. Embrace the mindset that steady income can be generated through high-quality dividend investments. Shifting your mindset to prioritize dividend investing can be a game changer. Instead of fixating on short-term gains, dividend investors focus on sustainable long-term income. They seek out companies with a strong dividend history, often called dividend aristocrats, known for financial stability and growth potential. This mindset helps maintain discipline during market volatility, as dividends tend to stay stable even when stock values fluctuate. Additionally, this approach is more sustainable and responsible. Investing in established, dividend-paying companies reduces the risk associated with speculative ventures. Diversifying your dividend portfolio across various sectors and industries is crucial. It spreads risk, so if one sector falters, your whole portfolio isn't severely impacted. This diversification also allows you to capitalize on different market trends and opportunities across the economy. By embracing dividend investing and building a diversified portfolio, you can create a stable income stream for long-term financial independence. Diversifying your dividend portfolio is essential for stability and growth. For instance, investing in both technology and healthcare stocks allows you to tap into the growth potential of both sectors. This diversification spreads your income sources, so if one company reduces or suspends dividends, your overall income remains more stable. One approach is to invest in dividend-focused funds or ETFs that hold a variety of dividend-paying stocks across sectors. These funds offer efficient diversification, but careful research is still required. Choose high-quality companies with consistent dividend histories and strong financials. Analyzing financial statements, assessing management, and staying informed about market trends is crucial. Reinvesting dividends is a powerful strategy for long-term wealth accumulation. It harnesses the compounding effect, where your earnings generate more earnings, leading to exponential portfolio growth. For instance, reinvesting a $300 dividend from a stock with a 3% yield could result in owning an additional 30 shares if the stock price remains stable. Despite the need for research and analysis, a well-diversified, dividend reinvested portfolio can offer significant benefits in the long run. Reinvesting dividends is a potent strategy for long-term growth. Through compounding, your portfolio can exponentially expand over time. This approach also boosts your income stream as you accumulate more shares of dividend-paying assets, resulting in higher dividend payments without additional investments. Moreover, reinvesting helps mitigate the impact of market volatility. You capitalize on downturns by purchasing more shares at lower prices, reducing your average cost per share, and increasing potential long-term gains. However, there are downsides, like missing out on using dividend income for immediate needs. If you rely on dividends for living expenses, reinvestment may not be ideal. In summary, reinvesting dividends is a vital tool for wealth accumulation and income generation. While considering potential drawbacks, it remains a key strategy for those aiming to live off dividends and achieve financial independence. Alongside reinvestment, maintaining a long-term perspective is essential in navigating market fluctuations, even in the relative stability of dividend investments. Thanks for watching our video, and see you next time.